A country's foreign reserves are important for two reasons. Reserves service the country's foreign exchange liabilities. It's also used to establish confidence in the country's financial fitness. Well, yesterday the Reserve Bank announced dollar-denominated holdings of gold and foreign assets rose to $49.58 billion in December. This from $49.34 billion in November. Independent analyst Ian Cruikshanks explains why this might not be good enough.
If that starts to come down lower, and we need it to be over 50 billion to cover that 6 months of imports, well over in fact. Where are we now? At about 47, 49 billion, that's the range we've been. And so we're at danger level. In the eyes of foreign investors, they're saying, whew, if there's a political disaster, they can't stand the strain of an outflow of currency because they haven't got the reserves to be able to supply it.
South Africa has done a remarkable turnaround in terms of reserves since the country changed politically in 1994. For a long time our reserves were in the negative. It then turned positive in 2003 under the then Reserve Bank Governor Tito Mboweni. It grew steadily to $10 billion in 2005, $20 billion in 2006 and $40 billion in 2011. But much depends on the global environment.
It takes driving forward in industry in the United States, in Europe, in Asia, so that they build up demand for what we can export, our base commodities, and that way then we'll grow our own economy, grow our own reserves, but it will take time.
Further expected weakness in the rand will make the Reserve Bank's task even more difficult.